Okay, so now I've shown how to convert bank statement to trial balance. So if you have a bank statement that you need to prepare first from, go to the trial balance. So convert your bank statement rather to a trial balance. It's a lot of work. It's not a good way to prepare FS, but it is what it is. Now, I want to move to an organization that is slightly larger. If you are preparing a financial statement for an organization that is bigger than maybe a PLC itself, that has so many lines, you know, from that bank statement analysis that we did, the company only has about less than 20 different lines. So that company is a very small company. But what if you want to prepare financial statements for a large company, which obviously you will not be doing bank statement analysis for them. They would have been using an accounting software, and they'll be able to get a TB, a trial balance. So the starting point in such situation is to get their trial balance. Is to get their trial balance. That's the starting point. So if you are the accountant of a company, you would have been doing daily postings, all of those things to get your trial balance. But we're not really talking about that now. We're saying at this point, let's start with the trial balance. So how we get the trial balance? You know, the things that we do to get trial balance, we'll talk about it some other time, right? So I want to prepare the financial statement of this company, and they have given me a trial balance. They have given me a trial balance, and the first thing that you will do, is to do what? Who wants to try? What's the first thing you do once you receive this trial balance?
Sorry, I didn't get your question.
Balance. Check the total, whether it's balanced.
Yes, thank you very much. Thank you very much. Someone has actually answered my question. But if you didn't hear the question before, I'm saying that a financial statement for this company. This company is a lot larger than the bank statement analysis example that we just did. This company is a lot larger. If you look at the number of trial balance lines they have almost 100 and something. Some organizations have up to thousands of trial balance lines, of GL lines that makes up their trial balance, right? So the first thing we want to do is make sure that trial balance they have given to us sums up to 0. Now, for this kind of organizations, you ideally not see a debit column and a credit column for their trial balance. They will just maintain a single column. Most sometimes when you pull trial balance from an accounting software, you don't get to see debit and credit, right? Like I presented in the previous sample. So everything is going to be presented on a single column. So how do you differentiate debit from credit? Debit balances will be in a particular format. Credit balances will be in a particular format. So most times, debit balances are always positive, while credit balances are always negative. So if I say it's negative amount, I know that amount is credit. If I say positive amount, I know that amount is debit. Now, it must not always be so in all cases, though. I've seen a lot of cases where credit items were the assets, were the debit balance, and normal balances. So it could be the other way around. What is generally seen?
I'm telling you, it's not like you don't let her move.
Please mute your mic.
Okay, please tell us and help us mute your mics. Okay, so what I'm saying is that there are situations where it could be reversed. That's why I'm not saying it is always going to be like that. For organizations that are using an accounting software, they will usually maintain just one column of trial balance, which is debit balances will be positive, credit balances will be negative. But it does not have to be so all the time. It will be reversed, which is perfectly fine. So what do I do First, let me check that my trial balance is equal to 0. So I'll sum up everything. Everything. By the time I look at my sum, I have my sum as being 1, right? Which is very close to 0. So there's no cause for alarm. Maybe it's due to rounding errors. There's no cause for alarm. If it's something in between 0, 1, -1, it's just rounding differences. There's no cause for alarm. Then on this TB they also gave to me, I can see that I have 2021 TB. This TB is they gave me for 2022, which is the year I want to prepare FS for. But they also gave me for 2021, and I also do that check on 2021. Let me add everything on my trial balance time. I'm saying that I have as 0. All right, so I know that okay, I'm still fine. The next thing that I will check is my retained earnings. So go to your trial balance and look for retained earnings. So the easy way to look out for them is to use the GL codes. Right, that's the easy way to look out for them. So things that start with 1, because they'll usually just code balances so that they can easily identify them. Things that start with 1, different companies, different coding system, but most of the time, things that start with 1 are always assets. So once I see something that starts with 1, I know that it relates to an asset. Things that start with 2 are mostly for liabilities. But every organization will have its own, right? So things that start with 3 is revenue. Things that start with 4 are expenses. Things that start with 4 are expenses. And things that start with 5 will be equity items. So you just need to code your own in such a way that is very easy for you. And this coding is very, very, very important. Right. So that's why you see almost every trial balance will always have this code for line items. So we'll check for retained earnings. Now, once you see this retained earnings, this is 24,525,850. I will go and check that this retained earnings is the same thing that was in the previous year final financial statement. That's the next check I'm going to make. I'll check that this retained earnings is the same, because if it's not the same, it means that there is something wrong with this trial balance that they have given to you. And if you have a wrong trial balance, it means that your financial statement that you are going to prepare from it is also going to be wrong. So go and check that this retained earnings that you have here is the same with what they had in the previous year. So it means that if I go and check the signed financial statement of 2021, the retained earnings that I should be expecting to see there is this 24,525. If it is not, you need to raise it that there is a problem with this FS, with this TB. So let's assume now our TB is 0. We have checked that retained earnings type. What is the next thing that we want to do? So most of the time, when we start preparing this, the FS, there are likely going to be adjustment that will change some of the numbers, right? But I don't even know what those adjustments is now. But I need to start preparing my FS now. So, and I don't want it to be that when adjustments come, I will not start doing some funny movements. What I will do is that I will create a new column for audit adjustments. Then I will now say adjusted CB. So you see that this one is unaudited. I'll create a column for adjustment so that when adjustments come, I will just plug it in and then I have an adjusted CB. So if maybe adjustments come now and I need to debit office equipment with 5,000, adjustment is going to be debit and credit. I debit office equipment with 5,000 and I credit residential with 5,000. Remember that minus means credit, positive means debit. So I'll just put it here. So see, this balance is already fine. I don't need to do anything. So that's why you need to create this column for adjustment. Then again, your adjustment column must sum up to 0 to make sure that debit is equal to credit. So once you have done this, you now get an adjusted balance. So what you do is that you pick the unaudited, then you add the audited. So you add the adjustment, then you get the adjusted, right? So once you have this adjusted, you are very, you have solved it, like 10% of the problem. So that if peradventure anything is going to change, you only put the changes in adjustment, and your FS is not affected, right? So I want to prepare this account in thousands. So after that, I just adjust my TV. I divided the adjusted amount by 1,000. This is not compulsory, but it's just if the numbers are so large, you don't want to be showing so much number. If possible, so if you can do it in millions, you can just divide it by 1 million so that all your figures are in million. So now with what we have seen, we are fine with our TB, right? Our TB is fine, everything is equal to 0. Return earnings aligns with what was in the previous year. I've created a column for adjustment in case adjustment comes. Now, where do I go next? What I will do next, this is very important. What I will do next is that I will map the TB. I will map this TB in 2 ways. I will map it based on financial statement line item. So when I say financial statement line item, I mean the items that will appear in my primary statement. For example, revenue, PPE, inventory. So those are the items that will actually appear in my financial statement. I will map it. This FSLI means financial statement line item, but because of line, I don't want to write it full, but let me write it here. Financial statements line mapping. Then after I do this financial statement line mapping, I will also do a note mapping. I will also do a note mapping. Why is this note mapping important? This note mapping is even more important than your FSLI mapping, because FSLI now is, for example, PPE. I can call something PPE, and there are so many things that makes up PPE. I have land and building that makes up PPE. I have office equipment that makes up PPE. I have, capital work in progress that is part of my PPE. So I could have so many things in my financial statement line item, but I need to also break it down further, right? So that people that are looking at my FS can see what I am doing. So if, for example, this land I'm building now, based on financial statement line item, I'll map it as property, plant, and equipment. I've mapped all these things, they look like property, plant, and equipment items. But I also need to further break it down. Okay, which kind of PPE is this thing? So this land I'm building now, I'll probably call it land. I'll make it land so that if I want to see the breakdown of what makes up my PPE now, I can know, okay, the PPE, inside PPE, there's land, there's this, there's that, right? So you have various financial statement line item mapping, but it is now further broken down in the notes mapping. So a lot of things could be mapped under trade and other receivables, right? But you also need to know the breakdown of this trade and other receivables. So you need to do financial statement line mapping and notes mapping. Very important. This, if you are going to prepare an FS, you know when they say when you want to cut down a tree, that you will spend most of your time sharpening the axe, so that when you want to cut down the tree, it will be very easy. That's what you are doing in this FSLI and notes mapping. If you need 5 days to prepare an FS, spend 2 days or 3 days self to make sure that this your notes mapping and FSLI mapping is right. I don't mean spend that amount of time, but just make sure you get this mapping right, because it will save you time. It will solve most of the problem of preparing the FS. So for time's sake, I have actually done this mapping. I have actually done the mapping. I have actually done the mapping, right? So you will see that there's land. Land is mapped to property, plant, and equipment. What type of property, plant, and equipment? Freehold land. Equipment is mapped to property, plant, and equipment. What type of property, plant, and equipment? Office furniture and equipment. I have this other one, equipment residential. It's also mapped to property, plant, and equipment. And what kind of property, plant, and equipment? Office furniture and equipment. So you could have various mappings, right? But just make sure you get to FSLI mapping right and note mapping. So someone might be saying, what if I don't know? If you don't know, just need to ask the people that are responsible for posting the transaction. If you are the one that posted the transaction by yourself, you should know that, okay, this thing, this is what it's for. But if you're not the one and you don't know, you just simply need to, ask questions on, okay, which financial statement line item is this going to sit, and then what is the sub breakdown. So if you look at inventories now, a lot of things could be in inventories: work in progress, finished goods, raw materials, consumables. So for FSLI map, you see that everything are all mapped to inventories. But we've now further broke it down that, okay, this one, what kind of inventory is this? Raw material. This one is consumables. This one is also consumables. This one is finished goods. This one is finished goods. Like that, like that, like that. So you are going to do that for each and every line item in your trial balance. The problem is the first year. Once you have gotten the first year right, subsequent years will be less painful, because it's just maybe if you create a new code. Because if you don't create a new code, I have done this for 2021, it will still remain the same in 2022, 2023, 2024. It's just usually the first year to map it right that you do it like that. Some accounting softwares are very sophisticated, in the sense that when you pull the TB, it automatically comes with the FSLI mapping and note mapping. There are some accounting software that have been built that way. But if your accounting software is not built that way, and how you have your TB and you have done all those checks we talked about, then you need to come and do this FSLI and note mapping. So once you are done with that, the next thing is after trial balance, because remember that that's the starting point of FS preparation. After trial balance, you move to what? You move to note. After trial balance, you move to note. After note, you move to primary statement. So remember that everything that is here are template based. You don't have to 100% follow this in your own case. You are going to suit it according to how it suits your organization. So I've come here now, note 5. So my note 5 is on revenue. So I want to say, okay, what is my revenue for the year? So what I will do is that the layman approach or the formal approach to doing this is to say, okay, this amount, this revenue now, I've broken it down into local sale of goods, export sale of goods. It doesn't have to be like that for your own. If assuming we're preparing the financial statement for the previous company, the bank statement analysis that we did, their own revenue was majorly lesson fee and registration fee, right? So that's what you would have brought here: lesson fee, registration fee. So this is going to be a function of the organization that we're going to prepare for. So it varies. This is not one cast in stone for all. So the old approach is that I'll go and do equal to, I'll come to my TB, I'll be looking for all the ones that are sale of goods. You know, I've done my FSLI and notes mapping. I'll be looking for all the ones that are sale of goods so that I'll add them together. But as a professional in this 21st century, you can't be doing something like that. So what we are going to do is you are going to use an Excel formula, which is the sum if Excel formula. We are going to use the sum if Excel formula. So if you are familiar with sum if Excel formula, fantastic. But if you are not familiar, so let's quickly take a look at the use of sum if. So what I will do is, or let me give a brief overview of what sum if does so that it will make this analysis very easy. So I have Toby Omolola here. He's one of my sales boy. I have who else do I have? I have Levers Academy, another sales boy. Then I have Abisola Azineji. Then I have Toby Omolola again. Then I have Toby Omolola again, yes. Then I have Levers Academy again. Then I have Abisola again. Then I have Toby again. Now, this is name of salesperson. This is amount sold. So this they sold 500, it sold 600, it sold 200, 300, 400, 800, 500, 100. So look at though. I want to now tell Excel. I want to find out if they say, okay, from this data, how much did Toby Omolola sell? How much did Levers Academy sell? And how much did Abisola Adedeji sell? The way we are going to do it is to say, I'm trying to build a background to sum if, just for those that might not have seen sum if formula before. I can say, oh, total sales of Toby Omolola is equal to, sold 500 here, sold 300 here, sold 400 here, sold 100 here. So it means, okay, in total, it sold 1,300. Now, look at how the amount of time it's taking me. Levels Academy sold 600 here. Okay, where else? It sold for 800 here. Okay, total sales is 1,400. Then Amisola sold 200 here. He also sold 500 here. So 700. Okay, those are the sales of these people. Now imagine you have sales people that do a lot of sales for you, and these transactions are up to 10,000 or 20,000. I want to find the total amount that these people have sold. You cannot be doing this equal to this approach. No. So we are going to use the sum if function. And what the sum if function will do is I'll tell Excel to sum something if a certain criteria is met. Sum if for example, I say, oh, anybody that the salary is 5,000, that ends over 50,000, I'll add 10% to your salary. It means that if your salary is less than 50,000, no add. If it's more, add. So I want Excel to sum if it is Toby Omolola. So what I'll do is I'll say Excel sum if in this range of data of salespeople, in this range of data, if you see anyone that is what Toby Omolola, sum the amount he has sold. That's the sum range. So you have the range of the pool of data that you have. The range of the pool of data that you have. The range of the pool of data that you have, right? That's the first thing you want. Let me take it again. So equal to sum if in this range of data of people that are selling for me, sum anybody that is Toby Omolola. And what are you summing? Add the amount is sold. So you see that it's 1,300. The good thing about this, I'll lock this range of data so that it's not moving up. I don't want it to move around. Use F4 to lock. The good thing about it is that once I've done for one person, I just need to drag down. I just need to drag down. So you can see that automatically, if I have 1 billion people that I've sold, I can just do one and drag down. It tell me that, okay, Toby Ola sold 1, Levels Academy sold 1 4. The series Abisola Adeniji is 0. The reason is that Excel cannot find this name in this range because I did not spell the name correctly here. So if you want to use sub if formula, you must make sure that the name that you are using to search is the same name in the range of data, unless Excel will not see it. But let me spell the name correctly now. Abis. Okay, sorry, this name is still not correct. Adeniji. Adeniji. Okay, so let me just solve my problem. Let me just copy the name the way it is here. Oh, I've seen it. Okay. So Abisola Adeniji. See that once the name matches, it will bring it out. But if the name does not match, you might have problem. Right. So that's the summing formula. So how am I going to do that? I'm going to use the summing formula to say Excel, Mr. Excel, sum if in this range of data of all these my notes mapping, in this range of all these my notes mapping, if you see anyone that is what? If you see anyone that is local sale of goods, pick him and arrest him. Once you arrest him, then sum all the adjusted balance. So I'll pick this column J. So this is my it's column Q is the one that is divided by 1000. So I put the minus in front of it because you know that credit balance is already in negative. So that's why it's coming out in negative. So what Excel has done is that in this TB, based on this my notes mapping, it has picked all the ones that I have mapped as local sale of goods, and it has summed up the balances that relates to it. So I already have it. Now the good thing is that I don't need to be doing this thing for each one. Once I have done for one, I'll just copy and paste. I'll just copy and paste it. Problem has been solved. So what that means is that Excel has also picked in that range of data, it has added all the ones that are what? Export sale of goods. So those are the breakdown of my revenue, 66 million. So once I've done that, I will go to my next one. I'll go to my cost of goods sold and paste it there. So you know that cost of goods sold is originally debit. So I don't need to put a minus sign in front to change the formula. I'll just leave it normal, that is still maintained. Then I can drag down. So what this has done for me is Excel is just saying, okay, in column K, in column F, look for all the ones that meet this name and sum it up. So that's why I said that if you want to prepare FS, your FSLI mapping and your notes mapping is you sharpening your axe. Because once you notes mapping right, it will just be your FS. Okay, tell me that you have a question. Okay, so I'll take that as no question. Love it. Do you have a question before I continue? Your hands raised.
Okay, sir. I want to ask this sum if is it same thing as pivot table?
No, it's not the same thing, though they can achieve the same function. You get, but it is not the same thing. Though they can be used to achieve similar things.
All right, sir.
Okay, so moving forward, I'll just copy it again. So every of my items that I have already worked on, that I've already prepared, right? Magic to you. If it's looking like magic, shout for help. But what we're not doing we're not doing magic. What we're doing is that we have mapped this to be based on our understanding of the company. We have prepared notes that okay, our selling and admin expenses is made up of advertising, commission and sales, transportation, distribution. Note that the name of that item here in this your notes that you have prepared must be the same as the name in this note mapping. The name of the item in your notes here must be the same as the name of the item in this your notes line mapping. So that remember from our practical, if the names are not the same thing, it will not bring out the correct value. So you have to make sure that they are the same name, right? So you copy that for admin expenses. So for all your notes, the same thing that you'll just be doing. Copy this place and put it here. So they do not have other income. Now, please ask questions if you have before I go ahead. Okay, so I believe that there's no question. So that's the first starting point. To get your TB right. Remember that the first thing you get to doing your TB is to make sure that it equals 0. If it does not equal to 0, return the TB or reject it or look for the problem and solve it. Check that your retained earnings that is in your TB ties with the retained earnings of the previous year. That's an indication whether the TB is correct or not. All right. Create a column for adjustments and get an adjusted TB. Then spend good time making sure that your FS is properly mapped so that you will not be doing old school approach to say, okay, my PPE is this plus this plus this. No, don't do that. No, map it and use SUMIF. So you are going to do that for 2021 too. I would have given 2021 as take home, but let me just quickly do that for time. The same principle. I'll say SUMIF because I have 2021 TB, so I can do it. I can say SUMIF in this range of data. Anyone that you see that is sale of goods, sum it. But this time around, I'm not summing 2022 balance. I'm summing the what? 2021 balance. So that's the difference between this and this. So in this place, I picked column K as the sum range, and column K is 2022 balance. Column G is 2021 balance. So once I do one, I don't need to repeat the procedures, right? I will just copy it as long as my notes mapping and FSLI mapping is done properly. I'll copy this. I'll paste. For expenses, I don't need to put minus in bracket because the balances are already in minus. So I'll copy this, paste other places on the FS, my other notes that I've already created a shell for. So if you have not created your own shell, that might also be another thing, right? But I have to just create a shell because we have limited time. You might have to just create this shell for your own organization, depending on your understanding of their the nature of their activities. But what I can advise is that if the organization is a small organization, If the organization is a very small organization, like the one that we saw, like the bank statement analysis we did earlier, you might not need to do note mapping because that might be a waste of time for a small organization. They don't have so many transactions. If you want to if you want to prepare their own FS, for example, now if you have lesson fees and registration fees, you can just do equal to the amount on the TB because the organization is small. You don't need to take a lot of time doing note mapping and FSLI mapping. But the typical ideal way is to do note mapping and FSLI mapping. So you are going to do this for all your notes, right? You're going to do that for all your notes. But there are certain notes that you're not going to do this for. There are certain notes that you're not going to do this for. Example of such a note is your PPE. So will I be wrong if I do that for PPE? No, you will not be wrong. But you know that when you are presenting PPE, you need to present a movement schedule for PPE. So we're not really going to talk about how to prepare a movement schedule now, because we're assuming that you have some bit of knowledge around it. So we're not going to talk about that, but ideally the movement schedule for PPE is going to show you the cost of the asset, of all the assets you have for the two periods that you are preparing, the normal period and the comparative period. Then you also show you for accumulated depreciation. Then you also get your net book value, right? So this one, the accountant of the organization will be able to get this because you cannot get it directly from the TB. It will be almost impossible to get it directly from the TB. But the people that are actually running the organization, the accountants, there are some people responsible for this. They'll be able to provide this asset schedule. So let's say in your organization, your finance team, there will be somebody that is responsible for handling PPE, right? The person will be able to provide you how PPE has moved. But when you get this PPE schedule, there's a way for you to check that it is correct. How do I check that it is correct? What I will do is that I will go to my TB, motor vehicle now, for a particular period. December 2021, motor vehicle is 533475. I will go to my TB. All the ones I mapped for motor vehicle, I can do a filter. I can do a filter if I want. Maybe you are looking for a particular item of motor vehicle. The amount that you are having in your PPE schedule must be the same with the amount that is going to be in the TB. That's how you know that the PPE schedule is correct. So look at, for cost now, I have 533475. 533475. For accumulated depreciation in 2021, I have 431475. I also have 431475. If I'm doing for 2022, whatever movement schedule they are giving to me, which I have, in this case, they have not updated the movement schedule, right? But whatever movement schedule they give to me, the cost of motor vehicle in that movement schedule must be what? 610,515. While the accumulated depreciation in the movement schedule. So for each of the items like that, I will make sure that every item must be 100% in line with whatever the TB is saying, because the TB is the authority. That's why you need to make sure that your TB is correct, right? So, but the accumulated depreciation for motor vehicles must also be 472, 467. That's a way I can use to check that the asset schedule they have given to me is correct, right? Then for other things that need schedule, like PPE, ROU, you know you will not be able to get the schedule from your trial balance. What you can just use is that at the end of the period, you can compare the closing balance in your schedule to what is on the trial balance to make sure that it is correct, right? So you just do that to align the two of them. at the end of the period. So this example I'm using is for a very large organization. Like the organization is quite large. So if you even want to prepare the financial statement for a very large organization, you can do that, with this approach that I've said that we're looking at. So once you are done with all your notes, note on revenue, note on cost of sales, note on selling and distribution. Now, also note that this approach does not varies based on the organization. If you are doing for a bank now, if they say you want to prepare financial statement for a bank, the kind of line item that the bank will have will be different from this kind of company, right? But whether it's for a bank or is for insurance company or whatever the institution is, once you're able to get their FSLI mapping, because it will still have a PPE, it will still have a revenue line, it will still have those kind of things. Once you're able to get the PPE line and the note line, you will be fine, right? Then make sure that your notes line is the same with what you have on your FS breakdown. So someone might be asking me that, what if I don't have anything about all of these ones? What if I don't have anything about it? You create it because you need to, before you prepare financial statement for the organization, you need to understand that organization. So you ask them what essentially makes up your cost of sales. They'll give that information to you. So that's what you are going to use here. What makes up your selling and distribution expenses? What are the things that you do for selling and distribution? They will tell you. So again, you need to ask questions if you are not sure. Then for some other things like these schedules, but your schedules must tie to the balances in the trial balance, right? So there are quite a number of things in this particular FS that I'm presenting that if you are doing a management account, you don't need. For example, now there is this note on deferred tax. So you can see here that there is reconciliation of effective tax to statutory tax, right? If I was doing a management account now, I don't need to show this, but this is in a financial report format because I need to publish it. It's going both internal and external. I'm going to show it. So if this was a management account, a lot of things will be reduced from this level of details. There will be reduction, right? You won't show too many things. So by the time you finish your notes, most of all these things, I'm not talking about them because you typically not see them in management account. You not see them in management accounts, right? You see most of them in financial reports. They are disclosure requirements. And if you are saying, how do I know all of these disclosure requirements? There is a checklist that will guide you to tell you, okay, you need to include this, you need to exclude this. So when you actually want to now prepare a financial statement for financial reporting purpose, there's that checklist that will guide you. But for management accounts, all these decrease in loans and advances as a note, you really do not need them. So I'm not taking so much time to talk about them, right? But the essential ones that you need is, if you look at your primary statements now, you have revenue. You need something that speaks to how you got your revenue. You need cost of sales. You need something that speaks to how you got your cost of sales at the barest minimum. So you need specific notes. Any other notes that you are doing is just for presentation purpose of financial reporting. So now, once I'm done with my notes, I've linked my TB to my notes. The next thing is I will now do is to link my notes to the primary statement. And my primary statement are statement of comprehensive income, statement of profit or loss, financial position, and changes in equity, right? So my statement of comprehensive income now, I already have my formats down. So I'll just go and link it. I'll now say my revenue. What is my revenue? I'll do equal to, I should just clear this one, some of these ones for now, just so that you see how it works. So I'll do revenue. Revenue is equal to, I'll go to note 5. What's my total revenue? 66 million. Right. For 2021, what is my revenue? 99 million. Remember that I did not pick this amount from the TBO. So this revenue, I did not pick it from the TB. You have to move from what? You move from TB to note to the primary statement. So we have moved from TB, we move the balances to the note. So we are now taking these balances to the primary statement, which is this three statements that I have here. So I'll look at my cost of sales. My cost of sales is I'll go to the note on cost of sales. My cost of sales is 57 million. But I want to minus this amount, so I'll put minus. Then I also do the pick it for 2022 minus 85 million. So I'll now get what my gross profit is. Then I'll pick my selling and distribution expenses. My selling and distribution expenses in note 7, I'll pick it. Is a cost, so I'll put it in minus. So I'll do the same thing for my 2021. So that's the same thing that has been done for each and every one of these items. I'm just linking it to the notes that I have shared. Then I'll get my operating profit, then my finance income. I'll link it to my finance income. And remember that my finance income, I've also gotten this from the TB to the notes, then to the primary statement. Now, before I continue, any questions for me?
And so I want to ask.
Yes, I have a question. Can I go ahead?
Go ahead.
Yes. Sorry for taking you back. It's on the Excel formula about when you pick a name and you want to know how much, you want to sum up what the activity performed by that particular person. That's sum if. Ordinarily, I use sum if for figure alone, but to link into a name, what was performed by the person, that is what I did not get.
Okay, so I did it. So if you have used it for in numbers, it will still the same process. It's entirely the same. There's no different procedure. It's still the same procedure that you use for a name that you also use for this thing. So it's still equal to the range of activities. Select the person's name and select the ranges for the sum. That's how you get your total balances. So there's nothing special used there. Okay, so let me just go ahead. Let's go to our financial position. So yeah, I'm saying that we have linked all the items of our notes to the primary statement, or before tax, and the likes. So let's go to the financial position. So don't mind me if I'm a little bit fast. I have to be conscious of time. So property, plant, and equipment, I'll also link this to the notes. So at the end of 2022, what was the value of property, plant, and equipment? I'll pick the value. But this value is showing empty now because I have not updated my property, plant, and equipment for 2022. So it means I need to go and update it. But at 2021, it was 13 million. So I'll pay, okay, what was my right of use assets? As at 2022, my right of use asset is as at 2022, my right of use asset is 606. But as at 2021, I'll do equal to 2021 was 383. 2022 is actually 241 net book value. So I'll pick that. My intangible assets, I'll do the same thing. 2022, 2021. So again, I don't want us to take so much time. My inventories, I'll also do the same thing. Equal to inventories is you go to the note where you have summed up inventories, you pick the balances, and by the time you do that, you will get you will get the full balance. Now, I'm going to one of the reasons why I'm not also filling all these numbers is because I want it to be practical and I want you to do it. I'm going to send this information to you. For those people that are able to complete their own or attempt it, then I can actually now send you a completed version that has been fully prepared, right, with every information. But to make it practical, I'm giving you the concept. The best thing is for you to now actually now practice it now. Do your TB, link it to your notes, and then from your notes, link it to your financial statements, right? So, placement of changes in equity is how has equity items changed during the particular year. So as of 1st of January, what was your equity components, right? There are two ways you can get this equity components, but the first way is that your opening equity components, you can get it from your trial balance. That, okay, this share capital, what was the share capital in my trial balance? If you go to your trial balance, you can look for share capital. So you see the value of share capital from your TB. At the beginning of the year, it was 249. So you bring it in here. So for everything at the 1st of January, you'll be able to get it from your trial balance, right? Then you will now look at things that have affected equity during the period. Retained earnings is accumulated profit. So when you make profit in a particular year, you know that it is going to increase your retained earnings. So if you look at this, I'll add the profit for the year, which is 3. I'll go and pick the profit for 20. This one is 2021 now. So I'll go to my income statement to pick my profit for the year. So I'll pick my profit for the year. So I didn't pick from there because these figures have not been updated. So I went to actually pick the right profit. But ideally, what should be here is equal to the profit from year. So you look at profit after tax, which is this amount. So you bring it here, but this figure is obviously not correct because a lot of things have not been updated. I mean, if you had other comprehensive income, you also include it, right? Then the closing balance of 2021 will automatically be the opening balance of 2022. So if that maybe there was dividend paid, now you know that dividend is paid out of profit. So you take out dividend from here. Those are conceptual, I believe. You have some bit of ideas around it. Then if there were probably transfers between share premium and relation reserves, or between share premium and retained earnings, you show the effect of that change in equity. Yeah. Then closing balance of 2022 becomes the opening balance of 2020. Sorry, closing balance of 2021 becomes opening balance of 2022. So you see that this is speaking equal to B15, which is this balance. Then profit for the year is added. You had the profits made in 2022. So you see that they will also pick the profits from 2022, which is profit for the year. Then so in this particular place, there were really no changes. The only thing that was changing equity was the profit made during the year. All right, so that's your changes in equity. Now, I'm not going to be able to touch on statement of cash flows because it's a little bit, maybe we need more time for more explanation, right? But I'm not going to be able to touch on statement of cash flows. However, if you have a very good understanding of of how to prepare a statement of cash flows, you can attempt it, right? You can attempt to prepare this statement of cash flows. So ideally, you'll be looking at movement in your changes in your financial position items. Is there cash movement or no cash movement? So I'm not going to be talking about statement of cash flows for now. We'll probably have another session where we talk about or focus on cash flow statement. So, however, this cash flow statement does not mean that your financial position should not agree. So you can complete your income statement, financial position, and cash flow. Then attempt with the way that has been taught in class, how you do your cash flow. You can practice that here, right? So with all of this approach, you should be able to prepare, any kind of financial statements, irrespective of the company, irrespective of the size. You should be able to prepare any financial statement. So if tomorrow they ask you, can you actually prepare a financial statement? You should be able to say, yes, I can do that. So to also, support or provide that better confidence, I'll be sending you these blanks, right, for you to fill up. Fill it up, practice, send it back to us, then we can send you a fully completed one to know, okay, these are the areas where I needed to have linked it to this, I needed to make this correction. But if you really want to have a very good understanding, as soon as possible, if possible tomorrow, or as soon as you get this material, you just start practicing with it. And you don't even have to wait for this material. You can look for any other material that speaks to this. You can even go and take the TB of your company, and so you just give me TB, and you go and prepare the FS for yourself. Okay, now, so I'm going to stop presenting this now. The final session, which talks about some common pitfalls in preparing financial statements. So some of the pitfalls when people prepare financial statements is some of these things maybe sound a little bit technical, right? But this one now is not for management accounting. Remember, I said that management accounting has less disclosures. But if you are actually doing it for financial reporting purpose, where you need to consider a lot of things, some of the things that would see as errors is that people don't consider impairment when preparing financial statement. You just we'll just prepare the financial statement without considering impairment. When we are doing some assumptions, maybe the useful life of an asset now, we are using unrealistic assumption. We don't usually recognize the fat tax assets, the fat tax liability. These ones may not really come in your management account, but when you're preparing financial statement for reporting purpose, you need to include all of these things. Then the incorrect application of a standard or a new standard. Failure to disclose financial instruments, inconsistent information in the notes to the account, incorrect treatment of foreign currency translations, and not properly updating the description of items in the financial statement, because the objective of your financial statement is anybody should be able to understand your financial statement. So if there are items that is not properly, disclosed or described, it might be problematic for you. So with this,